Welcome to the latest stage analysis video. It's Wednesday the 28th of December 2022, and as we come into the year end, I wanted to do a group focus on this year's leading group once more. Coal led through 2021, and as we come into the end of the year, although renewable energy equipment has been at the top of the RS table for the last 6 months or so, in terms of actual on a percentage basis, if we look through to the percentage basis of the year to date of the 104 industry groups here, you can see coal has actually outperformed year to date once more with an 85.3% move over the course of the year. So although it's been developing in a sideways range for a good 8 months or so now, it's been going sideways for a long time throughout the course of 2022, but it still hasn't yet completely rolled over and made a stage 4 breakdown like the rest of the market. So it continues to be the strongest group of the last 2 years. It was up 130 or so percent last year. We'll quickly have a look at this. Where were we? Start of last year. So running through, we've got 6th of December, 3rd of November. So about 130, 140% over the course of the 2021, and then another 85% in through 2022. So it's definitely been the strongest group, and it's a really good example of stage analysis. So I thought it'd be good to do a group focus on this, as there's a number of stocks in the group now rolling over in late stage 3. Obviously a huge stage 3 structure that's been developing over the last 8 months or so, that's starting to potentially break back down below that 30-week moving average once more, and testing the 200-day moving average. Relative strength on the weekly chart here, you can see, is still above the zero line. So this is the 52-week moving average of the group versus the S&P 500. So it hasn't yet broken below that, and that's still rising. So that's still a near-term positive in that regard, in terms of it potentially holding up, but it is starting to roll over here. So one of the things I wanted to start with is to go back low and have a look at the original stage 2 breakout here, as it had a classic Wyckoff structure. I highlighted it throughout the period of the breakout here on Twitter and in the website. So caught all of the largest stocks in that actually starting to move back out again, BTU being the major one, getting highlighted later in this period here as the main stage 2 breakout started to happen. But as you can see, we've got this classic Wyckoff structure here with a selling climax, automatic rally, secondary testing area within the range, then moving out of phase A into phase B, and then breaking down with a little bit of spring type action here, starting to move back up into the range, making a new stage 2 breakout attempt early in 2021 there. But it was a weak stage 2 breakout attempt, although it was a sign of strength rally out of the range. You managed to get out of there. In terms of, I say it's a weak breakout attempt because, as you can see here, you've got your relative strength is still below a declining zero line at that point. So it's a little bit early. So we want to see with a stage 2 breakout attempt is for the zero line here, the 52-week moving average of the group versus the S&P 500 to be rising. So at this point here, as that started to turn up, we then got this new breakout attempt. So back in May time here, this was the major breakout attempt. So the secondary breakout attempt after the backup range and moving out again, which then obviously went on to have a huge run through its stage 2 advance. Made a short interlude back into stage 3 here with the move back around the 30-week moving average here, and a little bit of weakness developing, but then made a continuation breakout to new highs. Continued on until it started to form the base structure we see now. We had this buying climax at the top here, automatic reaction, secondary testing area, sign of weakness in phase B, some up thrust in phase B, and then some shakeout moves, and it's continued through here, and now we've got a potential last point of supply as it starts to now break down at the end of the range. So from Wyckoff characteristics here, if we quickly look on our stock charts website here, you can see the Wyckoff accumulation schematic, which shows that original structure I was talking about. So we compare this here. You've got your selling climax, automatic rally, secondary test, which is your phase A area, as the this is your stopping action. You get a change of behavior and then a potential change of character. Early up thrust within here, secondary test in phase B, and then some spring type action in the test. You don't always get a spring. Sometimes you get a higher low, develop a last point of support, which this is a LPS, and then you get that sign of strength rally. So this is the mark up here that we saw in coal at the time. Obviously, that went on to form that obviously exceptionally strong stage 2 advance that we've had over the last 2 years now, but it is starting to show signs of weakening, starting to roll over. So I wanted to show you this on a drop down onto the daily time frame now and look at the structure in much more detail at the top of the range here. If we go back to the weekly chart quickly on this, you can see this is this area here from the buying climax across the buying climax automatic reaction. So this is the stage 3 structure. You don't know you're in stage 3 until you complete the first part of phase A. So in order to see signs of stage 3, you generally need to have a buying climax, an automatic reaction, secondary test, and then start to move into phase B. Once you move into phase B, you can tend to start to gives you a clue that you're in early stage 3, although you might still at this point consider it stage 2 as you haven't yet broken convincingly. You're still above a rising 30-week moving average, as you can see here. So until you get this further change behavior and you start breaking below the 30-week moving average and it starts to flatten out, it's not convincingly in stage 3 yet. It still could be considered late stage 2 at that point. But yeah, you can see there's definitely, once you start to get that structure developing, you've definitely got those early signs of stage 3, and so it then puts you on high alert. You would obviously start to trim and start to move out of your holdings in that and lighten your position a bit. So if we go into the daily chart here again, I'll quickly go through the current structure here. So you've got a buying climax, automatic reactions, secondary tests. So you've got multiple secondary tests within the range. We've got what we see as a sign of weakness in phase B as it broke the lower end of the structure here. So what we do with the buying climax and automatic reaction is we start to mark the base structure. Within the base structure, you then get obviously up thrusts and shakeouts within that. It's not a horizontal box that you're going to stay within. There's going to be breaks above and below as supply and demand tests the upper and lower bounds. So you've got to think of it, it's not a hard line as such. So, but then you can see we had an up thrust still potentially in phase B here. You can see it's still got a strongly rising 200-day moving average. Didn't break down convincingly at this point. Then continued to go sideways through the range and attempted to start to move back up again, but it's rolled over once more. Got a lower high compared to the up thrust here, and it's rolled here back below this 50-day moving average. So again, if we look at the Wyckoff structure for this, you can see the various markup, your buying climax, your automatic reaction, secondary tests. That's your phase A area. You then move into phase B, which is always the longest of the structure. This is where you build your cores and you potentially start to roll over. It doesn't necessarily mean when you're in this point that it's going to roll over. It isn't until you get into this area here and you get that change of behavior that you know that it's going to then potentially, the bias then shifts more towards distribution. So you don't always get sometimes you've got two schematics. Sometimes we have an up thrust after distribution where you get a failed breakout attempt, what we call a stage 2 continuation breakout attempt to new highs that then fails. You get lower high test and start to roll back over again back into the range. But I wanted to show you the second schematic on here, distribution schematic number 2. So this is more in line with what we're seeing with coal at the moment, and it's currently around this kind of area. Again, doesn't mean it's going to break down, but at the moment it has formed a lower high after forming the initial parts of the structure. So if I go back to the chart here, you can see that now we've got this lower high, the last point of supply after up thrusting in phase B. So we're within the latter part of the structure here. We're starting to break below the 200-day moving average here. You can see we've got multiple areas of support here, which it broke today. It had a minus 8% move on the day in the group, which is huge in a group chart, to be fair. And it started to break. You can see there's a trend line here as well that it broke below today, as well as the 200-day moving average. So we've got a little bit of a change of behavior going on in here in the short term. Obviously not as dramatic as we've seen further on in the base. So it's still it was tightening up, but now you can see it's actually broadening out a little bit again. So there's a definite change going on here. It would need to recover quickly in order to maintain this as obviously a more bullish structure that then goes off to new highs. If it can't recover quickly, it continues to push down towards the lower end of the range and then can't get back above this 200-day and 50-day moving average once more, then we could obviously see it start to roll over, get that major sign of weakness and stage 4 breakdown attempt. Obviously this area here, this zone, has been support multiple times. I'll draw that across here. So this has been support multiple times throughout. It did get broken earlier on in here, but you can see now this is a major area around this 460 zone. So if it does start to break below that with a major sign of weakness, so you would expect some support from this area in here, but if it could then obviously roll over into a major stage 4 breakdown attempt if that happens. So let's have a look at what's going on in the individual stocks in the group. As obviously looking at index charts and group charts alone is not good enough with stage analysis. What we want to see is what's actually happening with the individual stocks that make up the group. As obviously the group chart is weighted by the larger cap stocks within the group. So if we flick through to the group, I just wanted to show you the actual performance year to date of the stocks within the group. So you can see there's been 300% move in HNRG. Got a few down the bottom here that have obviously had major minus moves. TANH, I'm not even going to show you because it collapsed in March, so it's down almost 100%. So that one's gone. It's collapsed completely. We've got AREC has also had a bad year, and METC has also had a bad year, both down 35%. But otherwise, there's 78% of stocks within the group actually above 20% year to date, and 4 of those have done better than 100% year to date. So it's been exceptionally strong. BTU is the largest of the stocks within the group. So considering that's actually had 164% move year to date, give you a reason why the group chart itself has done so well. Right, let's go through the individual stocks. So starting off with the weekly chart here, you can see this is HNRG. So currently this has got the strongest SETR score at the moment. So I thought it'd be easier to order them by their relative strength. You can see the strength of the stage 2 move this has had. So the original stage 2 breakout week back here, late 2020. And it did move into stage 3, cup and handle type pattern, then made a continuation breakout. Did shake out a little bit, but then has continued on to new highs. So at the moment, this is still in stage 2, what we consider stage 2B. So stage 2B just means late in stage 2. There's no real specification for it. Something Stan made up the A and the B phases just to give a little bit more clarity to what part, where it is in the stage, whether it's early or it's late, but it's a bit of a gut feel of whether it's early or late. So I've tried to define it over the years by using a quarterly approach. So I consider early stage 2 as the first quarter within stage 2 to be stage 2A, then the 3 to 6 month period or the 3 to 9 month period even just to be standard stage 2, then anything after that to be stage 2B. So even if it does make a stage 3 and then makes a continuation, anything after a continuation is also stage 2B. So I don't then relabel it stage 2A. But again, that kind of stuff doesn't really matter. You can just stick to the 4 stages. It's a bit more of an advanced topic, talking about the A's and the B's and using the Wyckoff phases, etc. within the base structures. So it's easier for people learning the method just to stick to the 4 stages. So, and basically, is it early or late within it? And you can always tell that quite easily by just looking at a weekly chart. And you can see, obviously, it's been 2 years basically majority of the time in stage 2 with an interlude in stage 3 in this one. So if we look at this on a daily chart, you can see here we've got a little bit of a double top action happened over the last day or so. So started to roll over, failed breakout attempt to new highs, still got support below, still above the moving averages. They're in the right order. So 21 EMA there, 50-day SMA and the 200-day SMA down here. So it's still in stage 2 order as such. You want to see the short-term moving averages above median term and the median term above the longer-term moving averages. It's fairly simple in that regard. Go back to the weekly chart here. You can see what this would be considered here is a buying climax low. So this week it's actually made a new 52-week high, but it actually looks like it's going to close the week lower potentially. It hasn't yet, but it could close the week lower here, and that would make this a buying climax candle. So it's definitely one to keep an eye on there. NRP, this has also had a decent move year to date. I think let's have a quick look at that. So from January here, so up over 50% at the moment in this one. So although not one of the strongest in terms of actual percentage moves, it has got at the moment stronger relative strength. As you can see, it's making an attempt to make a stage 2 continuation breakout, but at the moment rolling over at the top of the range here. So again, if we drop down into here, into the daily chart here, across the structure, you can see we've made a continuation breakout attempt, and it's pulled back into the range. So it hasn't yet come all the way back in. So at the moment, this is attempting to break out to new highs. It's also above the short-term moving averages, medium term and long term. They're all in the right order. So this is a potential stage 2 continuation. However, if this fails, if the group starts to roll over and this forms a lower high, starts to come back into the range here, starts to move back below these moving averages, then this could turn into what we call an up thrust after distribution. So the UTAD that I talked about earlier from the Wyckoff structure here. So that would be this structure here. So it could potentially do that if the group continues to weaken in stage 3 and rolls over into stage 4. And at that point, the UTAD is the opposite to a spring, and you expect a sharp move lower at that point. So keep an eye out for that kind of behavior in these stocks. As if the group goes, these obviously breakouts will fail and come down. If it can hold, that would obviously give you a clue that the group's not going to break down into stage 4 and could potentially then make a new stage 2 continuation. So it's all data that you need to continuously take in and adapt to. As I said, with stage analysis, you want to always focus on the individual stocks within the group. You can start off with the top-down approach. You do your indexes, your sectors, your groups, etc. Once you see something in there that's interesting, you've got to drill down into the individual stocks and get a really good idea of what's going on. What's the technical attributes of each stock? Are there moving averages in order? Is the volume coming in? Is there distribution type behavior going on? Is there any negative sign to look out for? Is there a stock tightening up, etc.? There's all the kind of things that you would look for. So next up, we've got SXC. Did have a failed stage 2 continuation breakout from a large stage 3 range. Did have a strong initial move, but it was immediately reversed, rolled over, formed a massive UTAD and came back down. Actually had a stage 4 breakdown for a brief period, but was reversed back up again. So potentially again, this one's rallied back up into stage 2 in the latter part of the year here after a failed stage 4 breakdown attempt. But again, if we drop down onto the daily chart on this one, see it had a bad day today, not too bad, minus 2.64%, still within a sideways range in potential early stage 2 here again. So this is one of the stronger stocks in the group in the near term here. It's obviously attempting to move back into an early part of stage 2 once more after a failed stage 4 breakdown here. So CEIX, so this is another one of the major stocks in the group. It's had a really strong stage 2 move over the last few years. It's been holding up really well into the latter part of the year. It's only got a small stage 3 range that's been developing. So you can see there was not a huge change of behavior in terms of the move here at the start of the range, but then it made a lower high, started to roll. So at that point, started to give stage 3 clues there. So you draw your structure and then got a up thrust type behavior up here, which is now rolled over. Again, it's back up testing that 30-week moving average. You can see relative strength-wise, still massively outperforming the S&P 500 there, a long way above the zero line. So you can see through since the stage 2 breakout back here, it's still up over 700%. Yeah, at its high, it was up over 930+% there from the stage 2 breakout level. Obviously, from the spring type behavior back down here, it was well over 2,000%. So huge moves in this one. Had a stage 3 cup and handle type pattern through here, like we saw in multiple stocks in the group, which then made a continuation. But this definitely had one of the stronger stage 2 continuations that managed to carry on to new highs this year. So again, this one, go back to January here, you can see year to date, it's finishing up over almost up 200% year to date. So one of the strongest stocks, definitely. If we look at the daily log here chart, you can see the structure go into this. So we've got short-term buying climax, automatic rally, secondary test, phase B. So we've got an upthrust in phase B, starting to roll over. Potentially could be phase C, could be rolling over. This could be starting to break down from an upthrust and a test. So it could start to move lower, sign of weakness and come down, but it might need more time, as this one's definitely shown some real strength over the last year, and it's only a short base structure. So potentially this is certainly a change of behavior in the short term. As you can see, this is the biggest bar we can see on this chart, potentially since this bar here. How many other? This one's reasonably big. This one's reasonably big, but in this bar, this is potentially today minus 11% on the day, closing back below the 50-day moving average. It's still above the 200-day moving average, but there was heavy volume. We've had a couple of heavy volume days through here, so some signs, potentially signs of distribution in here, is that after this heavy volume here, it made a lower high and has rolled over now. So some distribution signs in here, relative strength starting to weaken. So certainly starting to show some early signs of stage 3 here, and it could break down quickly if it does break down there. You could have a sudden sharp stage 4 breakdown attempt, especially after the huge run that it's had, as people might want to offload quickly. Where else have we got? HCC. So you can see a very clear stage 3 range in this one over the course of since March time this year. So you're going to do buying climax, rallies, secondary test. So local double top there. Didn't quite make an upthrust in the range here. You can see it's actually made lower highs as it's gone through all the way down, starting to roll over a little bit here, but still not below that 30-week moving average. So if it does start to break that 30-week moving average here, that would be a further sign of its weakening. We've got, obviously, it attempted to some lower highs within the range here, which it's attempted to break above and then has rolled over once more and come back into the range. So it definitely, if it starts to break down below this 32 area, there's a good chance this could quickly drop into stage 4. You can see the local pivots here. So this area here, we've got some local. This would be our current watch for a potential breakdown attempt, where you could potentially, because it would be below that 200-day moving average, it would still have a lot of support below in this zone, but you could potentially start to move into stage 4 in that kind of area within this broader range. BTU is the major stock from the group. As I've said before, it's had a really decent move over the last few years. You can see the stage 2 advance moved over 500% from that move back in May back here. So yeah, May 2021. I remember highlighting it at the time in the Twitter feed and on the website, so you should be able to find that if you look back for that. But this massive inverse head and shoulders pattern, similar to what we saw in the group. The group chart itself obviously broke out earlier in the year, so the group chart was breaking out into stage 2 at this point. BTU still wasn't quite there yet, started to roll back over again, but still held that 30-week moving average before making that stage 2 breakout attempt in May and then running. But again, big cup and handle, inverse head and shoulders type pattern on this one. But the stage 2 continuation didn't make much progress in BTU. So you can see here, it only managed a 65% move for the stage 2 continuation there before it topped out. Quickly reversed, significant reversal bar there. So that's your initial clue that we might be starting to see signs of stage 3 behavior. So that quick run up, rally back down again, and then a lower high. So again, you start to build your structure across here. So again, if we zoom in on this one, It's been quite a big range here. So to take it out to 11 months, you can see the structure that's been building in BTU since April time. So you've got your buying climax. You can see the change of behaviour through here. We've got this sudden drop down back towards this 50-day moving average. 3 days touch of the 50-day moving average, rallied back into the 21-day moving average there, and then rolled over. So it couldn't hold that 21-day moving average and quickly rolled back under the 50-day. So that's our change of behaviour move. Initial signs that we might be starting to see some stage 3 behaviour. So as I said before, you've got a buying climax, automatic reaction, secondary tests. This is your phase A area. Start to roll into phase B. Sign of weakness within phase B. It made a higher low. Above this, it was held that 200-day moving average low, came back into the range, but couldn't rally, kept rolling over again. So it gradually built its way back up again, but it's been grinding its way up over the course of the last 4 or 5 months or so. It's come up in the watch list scans multiple times, but I haven't highlighted it very much at all. It's been a long time since I highlighted it, I think, because obviously this rising wedge with the weak behaviour in crude oil and the group as a whole. So I've been tending to avoid the coal and the oil stocks over the last 6 months or so in the watch list, whereas earlier in the year they were the dominant, obviously, stocks that were showing up. So you can see we've got a little bit of a structural change here. We've got this rising wedge with low volume on the most part there, failed little breakout attempt there, which then rolled again, low volume as it comes back down again, and now starting to creep back below that 50-day moving average. Got almost 10% move down on the day again today. Some big moves in the group today and on volume. So there was a lot of selling today in the group. I think it was potentially the last day of tax loss selling in the market, so could be one of the reasons why we're seeing that. Obviously it's been the strongest group of the year, so there might be people obviously starting to repurpose their portfolios early, but it is a quiet period during this week, to be fair, at the end of the year, before we start the institutional traders, etc., and the fund managers are mostly away from their desks, enjoying the break basically until the start of the new year. So if this does start to come back down below this 200-day moving average, and we could get a quick move down towards the bottom of the range here, started to break below the 23, 22 kind of area, we could start to see this move into potential stage 4 breakdown there. Go back to the weekly chart, so you can see it'd be around this area here, so the 23, 22 kind of area there. You could suddenly break into stage 4, and wrong one. That would be your area really, and then with the huge moves that we've had, potentially it could gap down or have a quick flush type move, as the stronger areas tend to come off quickly when people start to exit all at once basically. Arch Coal has been another really strong one, but again you can see the stage 3 behaviour within this. Right, take it from, you've got an early climax move in there which didn't shook out, so we could potentially take it from that area there across. So this is our sideways range here, but again the stage 4 breakdown would happen somewhere around this area in here. If we drop down to the daily chart on this, you'll be able to see that a little bit more clearly. So again, we need to zoom out a tiny bit to get a clearer picture on this one. So you see this area in here is our range on this. It's had a few up thrusts within the range and a shakeout move early. So that was a failed early stage 4 breakdown attempt. You can see the 200-day moving average was still rising, and the short-term moving averages was still above the 200-day moving average when that did break down. So that's what we call an early attempt. You can see relative strength was still outperforming at that point, so divergent compared to what was going on in the price action. So that was a little bit of spring type behaviour, and then it's come back up again. We've had some up thrusting behaviour at the top of the range again. So if this starts to break below this 200-day moving average here, it was off 5.73% today, starts to come back below, these areas in here, so probably have to clear below 120-ish. It could potentially start to move into stage 4 at that point, but at the moment still holding on in what we call late stage 3. So after going sideways for a good 8 months or so now, again stage 2 run in this one was fairly large. It was an initial early failed stage 2 breakout attempt there, and then started to move back up into stage 2 type behavior again with the recapturing the level. So probably take it from about there. So it had a good 300+% move from the stage 2 breakout attempt to the highs. So it's another one that's been very strong in the group. AMRLO was the leader. It was 2,778% move. So we see a rough guide from the stage 2 breakout there of its huge stage 2 advance. You can see where other stocks in the group made massive stage 3 cup and handle type patterns underneath the 30-week moving average. You can see this one didn't even break below its 30-week moving average until midway through this year. So the entire stage 2 move was captured. So from this point onwards didn't break until July this year, and at that point obviously had that close to 3,000% move. It's an absolute monster. You can see it again, but you can see the stage 3 behavior is now starting to creep into this. You've got this sideways range that it's been in. It's hugging that 30-week moving average, which is starting to roll over, and the 10-week has moved above and below it multiple times. So we zoom in on this one again to take it out a little bit more again to see the whole range. You can see this structure that's been developing here. So a little bit of a rising wedge to it. Still been holding this rising 200-day moving average on tests, but it's testing it a little bit more here. Moving averages are getting closer, bunching up getting closer to that 200-day moving average. Still outperforming the S&P 500 above the zero line, but if it does start to break below this 200-day moving average, then potentially could start to see stage 4 start to develop there. So at the moment, this one would still be considered in late stage 3. But relative strength still outperforming the S&P 500 over the last 2 years even. ARLP also stage 3, you can see here starting to break below. So this one could, if we zoom in again, could make an early stage 4 breakdown attempt. If we go back to the weekly chart, this was another one that had a huge move, 600% stage 2 advance, never touched the 30-week moving average. It's only the first time it's closed below it in the last few months here for multiple weeks. You can see the entire stage 2 advance was captured above that 30-week moving average, and it chopped around above and below that 10-week moving average throughout its stage 2 advance. So that one was a really strong mover and continues to outperform the S&P 500 and above that zero line. But again, this is the type of stock that could flush quickly if people obviously race for the exits in the group. So another one to be aware of. But again, consider this one a stage 3 at the moment. CNX, big change of behavior in this one. I would call this late stage 3 at the moment. It did have a failed stage 4 breakdown attempt, so it could potentially even be stage 1 with the failed stage 4 breakdown attempt. But with the group rolling over, it's either stage 1 or stage 3. So in a neutral position, but looks in a vulnerable position for a further stage 4 breakdown attempt there. Let's see, already in stage 4 here, so started to break down into stage 4. And didn't manage to recapture that and has rolled over. They've been basing for a while and is testing the lows of the range, so potential for a stage 4 continuation breakdown in that one. REC also in stage 4. Okay, back to the start. I won't go through the SCTR score now as we're already at 33 minutes. But you can look those up for yourself on TradingView if you get the stage analysis technical attributes indicator on your charts, which you just have to search for that. It's a free indicator, so you can add that to the charts. Right, let's get back to the start. I hope that was helpful and give you a good view of what's going on in coal at the moment. It's definitely in a vulnerable position for a potential stage 4 breakdown attempt. There's multiple stocks in the group. obviously doing very similar behaviour. They've had huge moves over the last 2 years. It's been the strongest group in the market. It is the leader year to date in terms of percentage move. So obviously, if the market does continue to show weakness like it has done recently, and coal actually ends up moving into stage 4, then we could see a lot of those gains evaporate very quickly. So definitely an area to be aware of, as if it does roll over into stage 4, it would be one of the last ones standing as such, as very few groups have actually held up this year. So it is the most significant group in terms of the overall market, really. Okay, will do. I'll see you on the next one.